How to earn $500 per month in passive income in Canada. 3 monthly dividend investments. What if you could earn $500 every single month without working extra hours? Today I'm going to show you 3 Canadian investments that pay monthly income, and exactly how much you would need to invest to earn $500 per month. We'll look at 10-year charts, dividend growth, current yields, and realistic expectations. Let's build your income machine. Investment number 1, XEI2. First up is XEI2. This is the iShares S&P TSX Composite High Dividend Index ETF. When you search it, type XEI.TO. This ETF holds dozens of high-dividend Canadian companies, banks, pipelines, utilities, telecom. Over the last 10 years, the price has steadily appreciated despite market volatility, including COVID. It's not explosive growth, but it's consistent and stable. More importantly, it pays monthly. Current yield is roughly around 5 to 6% depending on price. That means for every $100,000 invested, you're earning about $5,000 to $6,000 per year. That's roughly $416 to $500 per month. To earn $500 per month or $6,000 per year at a 5.5% yield, you would need approximately $109,000 invested. The dividend payments over the past decade have remained relatively stable, with gradual increases over time. This is a diversification play, lower risk, broad exposure. Investment number 2, REI Yun. To next is REI Yun.2. That's RioCan Real Estate Investment Trust. Search REI-UN.TO. RioCan is one of Canada's largest REITs, focused on retail and mixed-use properties in major cities. Over the past 10 years, the price saw growth, then a significant drop during COVID due to retail exposure, and has been recovering since. But here's what income investors care about: monthly distributions. Current yield is around 6%. That's higher, but comes with more risk compared to an ETF. At 6% yield, to earn $6,000 per year, you would need about $100,000 invested. That's significantly less capital compared to XEI. However, dividend history shows a reduction during the pandemic period before stabilizing again. Higher yield often means higher volatility. Investment number 3, PPL.TU. Now let's look at PPL.TU, Pembina Pipeline Corporation. Search PPL.TO. Pembina operates pipelines and energy infrastructure across Canada and the U.S. Over the last decade, the stock has shown strong total returns, with price appreciation and consistent dividend increases. It also pays monthly. Current yield is roughly around 6%. To earn $6,000 per year at 6%, you'd need approximately $100,000 invested. Pembina has a strong dividend growth track record, although there was a temporary adjustment during the 2020 energy downturn. Energy stocks can be cyclical, but they also tend to reward long-term investors. Comparison to summarize: XEI, diversified ETF. Lower risk, about $109,000 needed. RioCan, high-yield REIT, about $100,000 needed. Higher volatility. Pembina, energy infrastructure, about $100,000 needed, moderate risk. If your goal is exactly $500 per month, you could also split between all 3 for diversification. For example, $40,000 in XEI, $30,000 in RioCan, $40,000 in Pembina. That spreads sector risk and balances yield. Important reminder: dividends are never guaranteed. Stock prices fluctuate, yields change, and tax treatment matters, especially in taxable accounts versus TFSA or RRSP. Closing the key takeaway: monthly income investing in Canada is absolutely possible, but it requires capital, patience, and diversification. If you found this breakdown helpful, subscribe for more Canadian investing strategies. And remember, build assets that pay you, not liabilities that cost you.